Thanks so much, guys. Old school introduction, old school bio there. Wow, that's going about 10 years back. But all right, guys, what's going on? I know you guys have a lot of good information coming at you, and look forward to being part of this. We'll have some fun here. Obviously, these are fast-paced sessions. We're doing a little bit of Fib here, and I know Fib has been quite popular over the last couple years, and hopefully I can show you a different way to approach it, maybe package it into actionable game plan that you can take away at the end here. I like to be kind of conversational in the presentation, so go ahead and throw it in there, and I'll try to kind of hit your question or comment if it's relevant to the slide. If not, just hold on, and I'm going to try to hit you at the end if that's okay. A little closer to the mic, I'm right on top of it. So how's that sound level for everybody else? Let me know if it's okay, and if it's low, I'll adjust if other people tell me that's if it's a little light. All right, guys, so we're going to dive in here. I am Todd Gordon. I run TradeAnalysis.com. We're going to talk about trading Fib. This is applicable to any market that you're trading. So you're trading stocks, Forex, futures, options, Bitcoin, alternate, alt currencies, whatever you like. So we got to do the warning here. This is a risky game, as you know, guys. Don't be trading money you can't afford to lose. This is a game in which you're always trying to win the decision at the end of 12 rounds. I'm a real trader, as I'll kind of describe to you. It's all I've ever done. Out of college, I've been trading and in the trading market, so I know that this is a tough game. It's a skill game you have to learn. You're going to wind up on your butt a few times. You got to get back up off the mat, keep fighting, trying to win the decision at the end of 12 rounds. I've always been a market taker, never a market maker. I've always been on the side of the trade where you don't, just sit there and make the bid-ask spread. I've always been a risk taker rather than a market maker. And the tools I'm going to show you here, really the culmination of my 16 years as in the trading markets, which isn't that long. I still have a long way to go. But I'm happy to kind of put this in front of you and say, from my point of view, this is the best way to approach the markets. But this is not a get rich quick. This is a skill game. This is an edge over the market that I'm going to try to share with you. If it's for you, great. If it's not for you, no problem. This doesn't work with everybody. So that's kind of my best NFA CFTC disclosure. But most important thing is you got to understand the risk, not only to your account, but to every single trade before you get in. You got to be willing to accept that risk. And the only way you can do that is with a methodology that kind of looks ahead of the market. If I have a longer time, I kind of go into kind of a cheesy story on stand-up desks. One quick public service announcement, guys. If you haven't gotten one, get them quick, especially in trading. I found that stand-up desks help me, so I've actually replaced this desk over here where I'm doing the presentation with another stand-up desk. It's good for your back. It's good for your posture. You actually lose a little bit of weight, burn more calories, but I find you trade better when you're standing up rather than sitting in a lethargic position. And the price of the desks have come down. So public service announcement, get one. All right, let's see. Guys, let me know. Arthur says low on microphone. Speak to me, guys. Is volume good or do I need to turn it up? Talk to me. Okay, so this is the Dow, right? 1923, and you guys know what happens next, right? We rally all the way up to 1929. You guys know what comes next? Crash. Okay, so let's talk about Fib a little bit here. The market traded all the way down to 200 in the 1929 crash, rallied back, and then retested. Okay, thanks, guys. Appreciate it. Arthur, turn your speakers up a little bit. Everybody else is saying we're okay. Retested the 200 level, bounced up, finally sold off again, retested as resistance, and broke away. So what is this level? This is the 61%. This is one of these Fibonacci ratios that I will introduce to you today. So there's a lot of kind of misconceptions about Fib. Is it too subjective? Does it not work when markets are highly volatile? Well, guys, I'll tell you what, 1929 crash, the country was only like 140 or 50 years old at that point. Never seen volatility like that before. So certainly, it worked in a volatile market like the 29 crash, and there's countless other examples where Fib does work. And the other thing people say is Fib it only works because it's a self-fulfilling prophecy. And that's interesting, except the only problem here is Fib won't be applied to the markets for another 50 years. You can also use this for longer term market predictions. You can trade it. I trade it every day, but you can do longer term predictions. It doesn't always work, but when it does, you can pick out turning points that like other people just can't see. Okay, so I'm going to play about 30 seconds of a video. You guys should be able to hear it, and then I'll come right back to you.
With the Trading Nation team. Today, your team is Todd, Gordon, Boris Schlossberg, and Tom. We're going to give you some props because 3 months ago you said that oil would fall to 26 bucks a barrel. Listen to this.
I think you guys are going to be shocked to hear this. Technicals say in a good solid pullback we should see an equal leg push in the current move lower. A 77% drop from the reactionary high up at about $114 puts us at $26 in the crude oil market.
All right, fast forward to last Thursday, oil fell as low as $26.05. Todd, why were you off by a nickel? I'm kidding. I'm just joking. So now that you are the oil guru, technically, where do you...
So that article or that piece on CNBC, I was the guy that called the low on crude oil. It went viral, actually. It was the #1 article on CNBC.com as well as Yahoo Finance, and my website actually blew up that day. And it was all just from Fib. It's really all it was. Everybody was saying when crude was dropping so sharply in 30s, 20s, people were saying $15 and $10 and $1 a barrel. I just did 2 simple Fib calculations, guys. These are the actual charts I use for customers, and 26 bucks wound up being the low. Just 2 simple Fib studies that you can do. I called it when it was at 42, saying we stop at 26. Certainly not hindsight analysis. I wrote about it for customers. I traded it. I went on national TV, and you can do this with Fib. This is definitely not saying, look how smart I am at all. Just employ the principles I can teach you. You can call some pretty awesome turning points. So if you don't know me, I'm Todd Gordon, and I run tradinganalysis.com. I left the corporate side. I was a hedge fund trader. I was a senior technical analyst at a major brokerage firm on Wall Street. I left in 2010 when I met this girl. She was one of the few that could put up with me. We had Jake and Brody. They're now 3.5. They're insane. They're wild. I love them. Boys are crazy. You know how that goes. So that's a little bit about me. I run trading analysis. I run the business at home, and I didn't want to kind of trade the corporate life, trade for an investment bank or a hedge fund, and be gone 14 hours a day. So that's that. President knows all the bad stuff I've done in my life. He was at a reception, and this is Jeff, the best man, skewering me in front of Trump and Melania, like saying all the bad stuff. And trust me, I'm no angel. Jeff and I have done all kinds of bad stuff in our years together, and Trump is just shaking his head saying, oh my God. I run tradinganalysis.com, as I mentioned. I do CNBC. I'm going to be on Fast Money next week. I've been doing it for about 7-8 years. I'm also a distillery owner. I'm a partner in a craft whiskey distillery in upstate New York, which is kind of fun. So that's me. I trade every day. I trade my actual capital. I used to be a hedge fund trader, but now I just trade my money, run the research business. Kind of fun, just doing exactly what I want to do. I go into the city for TV, and I like working with guys like you, guys and girls. So Fib, as I said, is very popular right now. There's going to be a lot of questions. So if you have them, throw them in. I'll do my best. If I don't answer, I just am afraid it'll get us off topic a bit. Just write the slide number down. I'll go back at the end and hit it. Okay, so what are we going to do? We're going to look at 2 kinds of market conditions first before we get into Fib. We're going to look at how to identify trending markets and corrective markets. That's the most important thing. Then what we're going to do is apply our ability to pick out trend and corrective markets with Fib retracements, which is the most basic Fib tool out there. Next, we are going to bring in tool number 2 to the Fibonacci price analysis, which is called projections. Finally, we're going to combine all 3 of these concepts into an actionable game plan so you can identify support and resistance ahead of time and then put on trend pullback trades. So at the end of this session, if we stay on track, you will have a complete 5-step trading process that you can start trading in this afternoon's market using Fib. Okay, so let's dive in here first. Kind of the way I like to look at this, and this is a presentation, usually takes me about an hour 10, so I'm going a little fast. Basically, I went through a trading de-evolution. I used to use all these indicators and have all this stuff on my charts. Now I use just enough to be effective, the minimum effective dose. I like to identify areas of support and resistance ahead of time that have a decent possibility of reversing the market. If it doesn't happen, no problem. I have a point of ruin or invalidation where your stop loss resides. Very easy way to contain risk. If the market does respect your zone of support and resistance, which is derived from all these fib levels, then great. You have a very, very competitive entry, giving you obviously a solid reward. If it doesn't work, that's fine. Your area of support and resistance is identified ahead of time, and if it doesn't work, you can define your risk and contain your risk, which is the most important thing as a trader. So I really, really don't use indicators. And if you don't believe me, I guess I don't blame you. Well, let's just kind of take a look at life of a trading with an indicator. So this is the Qs on the daily, and this is a pretty typical fib support zone entry I can teach you. This candle moves down into the zone of support. You buy the breakout above that candle, you're in at 104. If you were to take the MACD, and these are the default settings for MACD, 12.26.9, that black line finally crosses above the red line all the way up here at 108. So if you're using a default MACD, I'm going to tell you, I'm going to beat you on the entry by $4. By the time you're getting in, I'm going to be taking profits on partial position. Okay, so to give up that distance, that's a lot. Okay, and I look at it as $4 of not profits lost, but additional risk you have to take. And trust me, it's not the sexy side of trading, but the most important conversation you and I can have is how to minimize the average size of your losing trades. You should write that down right now. The best way to become a better trader in the shortest period of time is to work on minimizing your losses. Maximizing your profits, that comes after years and thousands of trades. So fib helps you minimize your losses by getting you in at a more competitive entry. It's about anticipating, not reacting. Losers react, leaders anticipate. And that's exactly the way you need to do it with trading. Let's pick on MACD again. Fib entry gets you in about 740. MACD gets you in about 747. So what happens, guys, when you get in here, you get the MACD entry like, oh yeah, Amazon's gonna break out, and you didn't think about it dropping 15 bucks against you. You're probably like, oh damn, what did I just do? And you didn't account for it, you didn't position size properly, the emotions are going, you're freaking out, and you probably get out at the worst time just before the market rallies. If you get in with a competitive fib entry, you're in at a lower price, you have your stop very clearly defined below the fib zone. Market moves up, goes 15 bucks in your favor. You're like, okay, awesome. And then it starts to come back against you. And you're like, oh, this sucks, but okay, it's part of the plan. I can handle it. No big deal. You don't panic out. And then you get the ripper on the top side, and that's when you get the profit, right? So it's when you get into a trade trying to buy breakouts without a plan, that was like cool in 1998, 99, but those days are long gone. This is 20 years later. This is a much different market. So this is fib. Okay, so some objections to fib, which I think are all very valid. Where do I start and stop the analysis using fib? Which one of these 4,000 ratios in the chart will actually do anything? It's all pretty confusing. I agree. So here's a 6-step plan right here for you. I'm going to take you through this very quickly. This is on the display in the Louvre in Paris. It was handed down from 14th century Italy. Guarantee it. No, I'm just lying. But here's your 6-step trading plan. So number one, not even talking about fib. We got to talk about swing waves. Okay, we got to talk about how to identify short-term changes in the market. There's two kinds, minor and major, and those are longer-term changes in the market. So a minor swing wave is a high or low in the market that is not exceeded in at least 5 bars to the left, 5 bars to the right, and that guy will get a purple dot. Okay, so if you have a high bar with a lower high left, lower high right, and that high bar is not exceeded in 5